Hey everybody, Brian Shannon here from alphatrends.net. Today's Wednesday, the 8th, and the S&P 500 was down slightly here today. We're starting out with a daily chart here, and on this daily chart, we've got a very mixed message. We've got the volume-weighted average price from that March high, which is still just overhead, along with the declining 50-day moving average. Those two things represent negatives to me. The rising 20-day moving average is a little bit positive. And the fact that we're still trying to find buyers here near this prior low, that's kind of a neutral too. So when we look to the shorter term time frame, this afternoon on Twitter, I said this, the short side's looking a little bit more appealing. But when we really look at the intraday action, what we're seeing is a range bound market. So I kind of have to backpedal on that a little bit in that I don't think we're ready to short yet because again we're in this range bound area. We're more of a probably a day trading market in here. The market's waiting for the Federal Reserve to next week, and then the CPI on Friday. So the market's kind of waiting for that, and here we are, in a summer market where not much is really happening in terms of range for the overall market. To get a sustained move, we're going to have to break this range, and maybe tomorrow, if we get stuck below this volume weighted average price from the Federal Reserve minutes, that perhaps we come down and test this low, undercut it, and even test the low volume weighted average price from the low. But honestly, I don't see a lot of reason to be excited about long or short here in the S&P 500. And same is true for the Nasdaq. The Nasdaq is still below the volume weighted average price from the COVID low. That's that orange line. We've also got that declining 50-day moving average in green and the volume weighted average price off of the March high, all kind of coming together in this 320-ish area. So if we do see a rally from here, it's difficult to think that it can make it beyond this level, which was obviously prior support as well. So we have prior support, we have the COVID volume weighted average price, we have the volume weighted average price off of that March high, and the declining 50-day moving average all coming together in the 318 area. Now that's 11 points from here. So, that would be a nice trade up to that level. Is there evidence that the buyers are, back in control and maybe ready to push it up towards that level? Same thing. We're kind of range bound in here. This being the support area that we've seen, this being the band of resistance up overhead. I don't see the directional advantage here. So I'm going to say that, as far as the market overall goes, it's a kind of sit on your hands, wait and see what happens. But again, even if we rally, we have all that potential supply up overhead. So, maybe we're just going to need a lot more time for this market to heal. The Russell 2000, as we know, found buyers at the prior resistance. We don't need to rehash that. But right now, where we are in the Russell 2000 is kind of similar to the NASDAQ in that it is this prior band of support from earlier in the year that's now showing a little bit of resistance. We've got that declining 50-day moving average. We've got the volume weighted average price off of the March high. And, that tells us that we have to be very cautious up here, especially in light of the fact that we've just rallied from 170 to 190. Where has it come from? It's rallied 20 points. Where does it have the potential to go before it's likely to encounter a source of supply that might become resistance? We don't know if this is resistance. So far, it's acting as resistance, but is it building energy for a break and push up to the year-to-date volume weighted average price? Is it just going to chop around here for the next month or two, or is it going to break down and test the volume weighted average price off the low? I don't know. I do know that I don't see an advantage here, so I'm not going to press my luck and make big bets in this market. This market, the message of the market to me is clear. You say there's a lot of uncertainty in the market. The uncertainty is a clear message. It means just don't press your luck. Go slow. You don't have to have all the answers all the time and make big commitments. So we saw that this shakeout from the beginning of the month, that's where we're finding buyers so far in the Russell 2000. You can see we hit it here, and then again this afternoon. I don't see the directional advantage. We've got a rising 5-day moving average, and we have the rising 20-day moving average. Those are positives, but all of this up here is a potential negative. So again, it's very difficult to get excited about either direction. The semiconductors are finding supply at the declining 50-day moving average and the volume weighted average price off that prior peak. On the downside, maybe we see a quick shakeout down to the 20-day moving average, buyers regain control, and then we could push up to the volume weighted average price from last year and this year both come together at that 257 level. So let's look at a shorter term time frame. Is there evidence that looks like that would be the likely scenario? Not to me. It just looks like we've got this potential for 236, and below that maybe 234. We are below declining 5-day moving average. So let's go from this 30-minute time frame to the 15-minute time frame, and it's just nothing to be excited about. The biotechs, nothing to be excited about. We're up at the top end of this prior support. We were at the declining 50-day moving average and the volume weighted average price off this peak. We've got the trend line up ahead. Nothing to be excited about that I can see. What would take most people off guard is if this market does something big in either direction, and I just don't see the catalyst for it beyond the CPI on Friday and the Federal Reserve next week. It could be that we're just in for a dull market, and shorter term trades in the individual stocks is what it's shaping up to be. We've got a rising 20-day moving average here in the financials. We've got a declining 50-day moving average. We're at the volume weighted average price from that peak is where we've seen this market rejected from the March peak, that is. So again, what about the 15-minute time frame? We're below a declining 5-day moving average. We're down to the volume weighted average price from this low, and that tells us caution. It doesn't have to bounce here, but I think that we're below declining 5-day moving average. It's more likely to do this and break down. And if that's to happen, perhaps that gives us, a little bit insight into what the broader market is going to do. But again, I just don't see the case for anything, aggressive in either direction. Energy names continue to grind higher. Raise your stops if you're along them.